Yes, friends, we are ready with our stock list for 2021. A defensive approach this time because stock markets are at all-time high. So if you look at our approach, it's a Rahul Dravid defensive approach, as discussed on Twitter as well. Team selection, we have made a team of stocks, non-BFSI stocks, and the criteria for team selection is talent, potential, and temperament. Looking at the stocks for this list, it's mainly compounding stories, which are fundamentally very strong, um, strong moat, and various parameters that are used over here. Most importantly, debt equity ratios to be low at 0.5, under 0.5. ROCs and ROEs are taken into very strong consideration along with operating margins. And not to forget that promoter pledging is a big no. The market reach and the model for the company should be scalable. Corporate governance is a very strong criteria, and it should have a decent credit rating along with liquidity in the stock. And this time we're also looking at strong hands holding the stocks like FIIs and DIIs. Now we look at why we have chosen return on capital employed as our top criteria. Well, folks, PE, I believe, is very overrated. And now with the pandemic causing a lot of effect in the financials, we believe that a low PE, high PE idea is not to be discussed much. We should be looking at more of return on capital employed. One more reason that of late we have been saying that low PE is not the way to go is because low PE could have various reasons, and they are outlined here. Could be slower growth or a doubtful management, and earning quality slowing down, or the operating margins or return on equity and capital employed are not supportive, and maybe the industry is very sluggish. So these are the reasons, like a lot of companies which have low PE, and they will continue to have low PE in future as well. On the other hand, return on capital employed is the way to go. It's a way of it's a company's efficiency, and it is one of the strongest parameters to look into. Now we have the complete list of stocks, the playing 11 and the top 16. If you look at the list, we have got a mix of various industries. Because of the pandemic, a few sectors like FMCG, IT, and pharma are taking the big chunk. They have been performing better, and we believe that going forward, these sectors will have a lot of strong tailwinds for them. If you look at the FMCG sector, we've got the likes of Nestle India and Colgate, and also we've got Procter and Gamble Hygiene, the three FMCG picks. From the IT space, we've got the mega boy, the giant TCS with HCL Technologies, and an interesting MNC IT company, Oracle Financials. From the IT and pharma, we jump to, sorry, from the IT and FMCG, we jump to pharma. In the pharma space, we've got the likes of Abbott India, again, a very superb MNC to look into. And with that, we also have a smaller company, Alembic Pharma, more into formulations. Then we go to energy. In the energy sector, we've got the gas section of the energy taking the lead. We've got Petronet LNG and Mahanagar Gas. From the chemical space, we have got the big boy Pidilite Industries with an upcoming company called Deepak Nitrate. From the FMEG electricals, FMEG sector, we've got a very fast growing company, KEI Industries. From the two-wheelers, we've got Hero MotoCorp with its rural presence. And now if you go to agriculture sector, we've got Coromandel International as one of the best plays in that area. Looking at one pick from the infra space, which is KEC International, which looks like one of the better plays. So there we are with our 16 players in our team. And folks, point to understand here is timing the market is a futile exercise. We believe that to make money in stocks, you should never be out of stocks, so keep invested. There are two probabilities in the market now. First is that the market could correct, price correction of 15 to 20%, maybe even more. but that's less probable. What is more probable is a consolidation from these levels, maybe Nifty between 13,000 and 14,500 for the next 12 months, which is more probable, and that will give a lot of stability and strength to the market going forward to 2022. So friends, do your own due diligence, stay invested. Happy investing. Thanks for watching. Please subscribe for such investing updates in future, and make the most of your wealth this year in 2021. Thanks once again.